Thanks, Lily. Intel is the story today because the stock is jumping to $79.35, up 2.31%, after a quarter that beat expectations and a second quarter outlook that came in better than Wall Street feared. The company reported adjusted earnings of 29 cents a share versus just 2 cents expected, and revenue of $13.6 billion versus $12.4 billion expected. More important for the tape, management said second quarter revenue should land between $13.8 billion and $14.8 billion, with adjusted earnings of about 20 cents a share and margins improving. That is the kind of guidance that tells investors this is not just a one-quarter pop. Intel also said data center sales rose 22%, which matters because that is where the AI demand story is strongest.
Brian, the market is also reacting to the bigger narrative shift here. This is no longer a company just trying to survive. Lip Bhutan is talking about capacity, supply, and outside customers, and the Tesla and SpaceX terafab connection gives the foundry business a real catalyst if it can turn into volume. The company said its manufacturing segment still lost $2.4 billion, so this is not a clean turnaround yet, and there was also a $4.1 billion restructuring charge tied to Mobileye. But the key point is that Intel is showing better execution in the core business while trying to build a future in foundry. That combination is why the stock can move this hard on earnings night.
Exactly, and the details underneath the headline are what make this interesting. Client computing was better than expected, data center and AI came in strong, and the company said the memory shortage that has been pressuring PC supply was not as damaging as feared. On top of that, Intel is guiding to roughly 11% sales growth at the midpoint of the next quarter, which is a big change from the old Intel story of shrinking expectations and constant resets. The stock had already been up sharply this year, but this report pushes the debate into a different lane. Can Intel actually re-rate as a growth and manufacturing story instead of a value trap? At $79.35, the market is clearly saying that question deserves a fresh look.
And the valuation debate is now front and center. Intel is trading at a very rich multiple for a company that still has to prove it can win outside foundry customers and close the technology gap with Taiwan semiconductor manufacturing. But investors are paying for the possibility that the AI build-out, the CPU rebound, and the new partnerships all start to compound at once. The company said this was the 6th straight quarter of revenue above its own expectations, and that consistency matters. If the next few quarters keep showing better margins, better execution, and real customer wins, then today's move may be the market starting to price in a different Intel than the one investors knew a year ago.